Thank you, David, O&M Partners, and of course, Alamos Gold. Today, I'll be discussing the case for gold. For as long as I've been covering the gold sector as a journalist and commentator, over 22 years, it has been for the most part a fear story. At first, in my world, the fear story began with the creation of the euro as a currency, an alternative to the dollar as the global trade utensil. And then years later, the collapse of the economy of Greece and it potentially leaving the European Union, followed by the collapse of the EU itself, spawned by economic hardship in Southern Europe. Of course, that never happened. Then the story shifted to, although it was there all along, the eventual collapse of the US dollar due to hyperinflation, which again, we never saw, and the hoarding of gold by countries such as Russia and China, which is real. We don't walk around bedazzled in gold in really any form. We've spent our money on things that notoriously devalue over time, as they're supposed to, so that you buy more replacement things. It drives our consumer-based economies, or maybe just the Chinese economy. These fear stories came and went, and along with it, the market factors that saw peaks and valleys in the price of gold, and the equities primarily affecting longtime believers in the asset. I'm going to call them gold bugs. Even though I was never a fan of the fear story, it always seemed to work as a message, as a driver for the market. Let's look at some gold facts. In 2001, the price of gold was near $250 per ounce. Today, at near $1,700 an ounce, that's a 500% gain in just under 20 years. In mid 2004, it was close to $450 an ounce after just 3 years, almost a double from 2001, almost a double in 3 years. Since August of 2018, gold has risen in value by approximately 35%. What other commodity has done that in the last 18 months? What other commodity has risen in value by 500% in about 20 years? What other commodity has risen in value while most consumables decline in value? You spend $800 to $1,000 on a phone, an iPhone. It's worthless in 2 years. You pay $35,000 to $100,000 for a car. Even real estate. Has it gone up 500% in 20 years or 35% in the last 18 months? Now, that would be insane inflation indeed. No one is calling the rise in gold over time insane inflation. Here's another interesting fact, a fact that hasn't changed much for as long as I can remember. One half of 1% of the investment world, whether it's retail or institutional collectively, is vested in gold. One half of 1%. This means that 99.5% of everyone are not in gold. Most people are not holding gold, the physical metal, the ETFs, or the equities, the stocks. Gold is finite, almost like real estate, only much, much less of it. It's not everywhere like dirt is. What do you think would happen if another, let's say, one half of 1% of the investors get into gold, still leaving 99% out of it? And what somehow if that number creeped up to 5%? 5% of retail and institutional investors collectively investing in gold. That in and of itself is a 20 banger, 20 times for the market. With the price of gold on the spot market multiplied by 2,000% with 5% invested in basically a finite commodity such as gold, that's an insane number. And I won't even name it, the price per ounce. You can figure it out. But at 1%, it's still almost $3,500 an ounce. And guess what? Because of the recent rush to gold by the gold bugs and their friends, people in the supposed know, it's harder to buy that bullion. It's less available. And for the last few months, production of gold has come to a halt due to COVID-19. The supply of gold has been suppressed and the demand has increased. It's a perfect storm formed by both fear and greed. Incredible. And it's not going to disintegrate. Gold won't fall apart. Gold will not devalue. Why would it? Especially now when we may be completely converting to a digital currency where cash is just not used anymore. Will it be backed by gold? Well, why did Russia and China begin hoarding gold a long time ago? Why did Venezuela just pay for a shipment of needed gasoline from Iran with gold? And in this arena where gold is climbing in value as quickly as it has been, If I hand you 20 or 30 gold rounds or ounces, might you be inclined to hand me the keys to one of your cars that you might have for sale? What would either of us have to lose in that transaction? The value of that car would perhaps decline over time, while your newly found gold would most likely go up in value. I believe I've established the case for owning the physical metal, gold. But where's the gold coming from to begin with? Like everything else we consume, purchase, collect, eat, or hoard, it comes from the ground, the earth. Someone has to explore it, develop it, and produce it. You just can't go into most fields and pick it. It doesn't grow like weeds willy-nilly like wildflowers in the spring. Mining companies exist for this reason, and most are publicly traded. These mining companies have to raise money from the public in order to explore, develop, mine, and produce gold. They issue shares, allowing investors to participate along with them in these processes. Today, one share in Apple stock is worth about $314 for a company that produces items that devalue immediately after purchase, such as iPhones, and become worthless over a couple of years. Newmont Gold, the world's largest gold producer, is at $51 a share, with 0.5% invested in the gold market. Alamos Gold is near $8 a share, with again 0.5% of investors globally in the market. You've got to ask yourself, as a generalist investor, perhaps someone who has never invested in gold before or gold stocks, why are you here? What brought you here today potentially for the first time? What are you beginning to see that you never considered before? What if you and perhaps 2 or 3 of your friends gets involved in gold, more involved, and or gold stocks, and this message continues to spread in a world where gold remains more or less finite and the demand grows? With $6 trillion plus, a phenomenal quantitative easing being plugged into the US right now, money being printed backed by nothing, fueled by coronavirus, the fear seems to be real enough for me right now. Thanks again to O&M Partners and Alamos Gold for asking me to participate in this presentation.